Hello and welcome to Portfolio Matters. Today we will be discussing the silver market. But before we do that, I will read the disclaimer. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end.
Thank you. Please.
Richard, take it away.
Thank you. So I'm going to do a presentation today on silver. And I shall, subject which I guess is in the news because of speculation about precious metal prices. And it seems an opportune time to do it. So the conclusions that I've drawn from my look into silver is that the supply and demand for silver is currently about in balance. The price of silver tends to move with the price of gold. If the price of gold increases or decreases, then silver will probably follow a similar trend as a precious metal. But it also has a separate set of price drivers. So it's an industrial metal as well as a precious metal and as well as being used in jewelry. And silver supply is currently falling slowly whilst demand is probably increasing. Industrial demand is probably increasing. And if the current supply-demand dynamics continue, then I think that the price of silver is likely to rise. So let me go through with some detail. So it's a chemical element. Silver is a chemical element. It is a soft, white, shiny metal, and it exhibits some interesting properties. It is the highest electrically conducting metal. It's the highest thermally conducting metal, and it has the highest reflectivity of any metal. Found in the Earth's crust in pure metallic form, as an alloy with gold and other metals, and in some minerals. And most silver is produced as a byproduct of copper, gold, lead, and zinc mining and refining. It is an important industrial metal, and as we'll see shortly, over half of silver production is used for industrial purposes. It's a potent biocide with multiple medical uses. For example, it's incorporated into wound dressings and used as an antibiotic coating in medical devices. And these medical uses are, I think, increasing as it's becoming more widely recognized. It has powerful medical properties. It's a precious metal, and it used to be a monetary metal, but isn't really anymore. So how much silver is there? Well, very little. It's the 68th most abundant element in the Earth's crust. I'm sorry, that's not 60 parts per million. That's 0.07 parts per million. And so it is far more rare than most industrial metals. This is a price chart of silver from about 1800. And as you can see, it has occasions of extreme volatility. The price has been on a gentle trend upwards since about 2000, with quite a lot of volatility associated with it, and it's currently rising quite sharply. From the year 2000, you can see that there was the peak in 2011, the time when gold price peaked, and it's fallen all the way back down to around about $15 an ounce, and it's now around about $25 an ounce. It is relatively correlated with gold. So confusingly on this chart, the gold line is silver and the blue line is gold. But you can see where gold goes, silver tends to follow.
So I think the thing to say about the silver price is it's highly correlated with gold price, but much more volatile. So when the gold price goes up, silver goes up much more, and it comes down much more when gold comes down.
Yes, And the silver itself has a high level of volatility. So this is the volatility of the SLV ETF, the silver ETF, and you can see its volatility, generally speaking, ranges between 20 and 40, whereas the VIX volatility on normal occasions is below 20, so significantly more volatile. So supply and demand, this table is millions of ounces. We go from 2011 up until 2020. The 2020 figure is a projected figure, and obviously we've had COVID. I don't know what impact COVID has had on these numbers. But if you look at the bottom line in the market balance, you can see, roughly speaking, there is a supply and demand balance. It fluctuates year on year, but there isn't any huge surplus or deficit. Total supply is round about 1 billion ounces, and total demand high 900 million ounces, which is equivalent to around about 30,000 tons. So it's mine production, recycling, and these two, net hedging and net official sector sales, are irrelevant in terms of quantity. Demand, the majority of demand is industrial, with photovoltaics making up a large chunk of that. Then photography, jewellery, silverware, and physical investment are all important uses. So let's have a look at silver supply and demand. Predicting the future supply-demand balance for silver is, I think, quite difficult. There's some factors which influence the silver price. The majority of silver is mined not in its own right, but as a byproduct of other metals. It makes for a weaker link between demand and supply than there is for most metals. It's a second-order effect. Half of all silver mined is used for industrial purposes, as we discussed, which makes silver prices significantly dependent on the outlook for the world economy and silver's specific use cases and industrial demand. So predictions for the global economy you would expect to weigh heavily on silver demand predictions, and therefore the projected pricing for silver. So what's happening with silver supply? Recently, there has been a reduction in annual silver mine supply. This is largely a result of declining grades at existing projects, a lack of new discoveries, and very few new mines coming online. So here, this is around about a 5% reduction. This is about 2.5% reduction. The mine production from the 10 largest silver producing countries is on a downward trend. And annual additions to silver mine capacity from development projects are negligible. So this is primary silver mining, new capacity has essentially disappeared of late.
So this is just silver mines though, it's not silver as produced as a byproduct.
This is silver mines, yes. So very little new silver mine capacity coming on. So silver is produced as a byproduct of copper and other metal mining, and therefore the quantity of byproduct produced will have some sort of linkage to the capital investment of miners in these other metal mining industries. And this capital investment is dropping, which suggests that the trend in silver byproduct production is also possibly going to drop over the next few years. It's not definitive, but it's an indicator.
Well, the one thing I'd say, Richard, is this is a dynamic process. And as the price of other metals, such as copper, goes up, perhaps they're going to invest more, and that will mean the supply of silver also goes up.
Exactly. So it's a complex sort of three-dimensional network of factors affecting the level of silver supply. I agree, Keith. So silver secondary supply sources are in decline. Now, I don't know why they're in decline, but clearly from 2011, they've dropped from around about 275 million ounces to about 200 million ounces now.
Can I come in actually?
Yeah.
So the reasons for the the decline in scrap are that jewelry recycling has declined as the price of silver has declined.
Right.
So that could be expected to go back up if the price of silver goes up.
Yeah, so exactly.
And
thank you.
Also, a lot of silver used to come from photography.
Yeah, so I think actually if you look at the supply of silver from photography, most of silver in the last 10 years or so of its use as a photographic agent was already recycled. So in the last few years, a loss of silver recycling from photography hasn't actually impacted the numbers to a great extent. They got very efficient at recycling silver from X-ray plates and so forth. So global silver bullion inventories, around about 1 billion ounces, or just over 1 year's mine supply. So this is exchanges, dealers, ETFs, exchange traded products, and government inventories. So apart from industry and as a precious metal, jewelry and as a precious metal, where does silver demand come from? So the largest single category, industrial fabrication, as we saw earlier, multiple uses, solder and brazing alloys, batteries, dentistry, glass coatings, LED chips, medicinal, nuclear reactors, photography, photovoltaic cells, RFID chips, semiconductors, touch screens, water purification and wood preservatives. This is the antimicrobial properties of silver being used. And there are others, but this is a good selection. Shows the broad variety of uses that silver has. So there are 3 key green applications covered in this study by CRU, which is a consulting firm, and they are solar cells, electric vehicles, and nuclear. And they estimate that demand is in the range of 110 to 140 million ounces per year up until 2030. So nuclear is a smaller use, but it's a very interesting use, and it shows I think, the diversity of silver as an industrial metal. So silver is used in control rods in nuclear reactors because control rods have to be a material capable of absorbing neutrons without undergoing nuclear fission, with a high mechanical strength and resistance to corrosion. And one of the most common materials used for this purpose is an alloy that is 80% silver, 15% indium, 5% cadmium. So though it's relatively small offtake, it's a fascinating use and an indicator of why silver is such a difficult metal to substitute for, which we come on to later. So it's forecast demand in green technologies. It's interesting that auto electrical is going up in a steady increasing trend, but the solar doesn't appear to be such an increasing trend. One of the points there is that there is a continually increasing efficiency of the use of silver in photovoltaic panels. So whilst the projected solar capacity is increasing very rapidly, the efficiency of use of silver in solar panels is also increasing, and the two tend to offset each other. Now,
so one of the things I notice about the demand charts is that they forecast this linear increase in silver demand from automobiles.
Yeah.
And that's not going to be the case. If electric cars start to be mandated, and if they start to gain traction in the marketplace, then all the infrastructure makes them easier to use, and it's likely that demand will accelerate. It won't be linear.
Yeah. So I think this was prepared by the Silver Institute and CRU in 2018. Now, I think what's happened in the last 9 months is there has been a massive shift in policy objectives by governments around the world to move us much more rapidly towards electric vehicles and green technology. And these graphs, I suspect, don't take that shift into account. The other thing is that internal combustion engine vehicles use silver in all of the switching processes. A lot of electrical contacts have silver in. So that element will remain unchanged as you move. If you have an equivalent volume of vehicles produced, that element will remain unchanged as you move to electric cars. But what you will get is any silver that is required in addition in the electrical propulsion system of the electrical vehicles. But it's a good point, Keith. So anyway, virtually every electrical connection in a vehicle has silver, and 55 million ounces are used annually by motor vehicles.
Wow.
So, as I said, electric vehicles may use a bit more silver, but internal combustion engine vehicles use a lot of silver in any event. So I'm not sure the simple switch from internal combustion to electrically propelled vehicles necessitates an increase in demand in silver unless silver is used in the propulsion technology. So there are some future technologies that may use silver, and one of them, interestingly, is inductively coupled power transfer. So that's a mechanism whereby effectively you bury a copper coil in the road, and the vehicle running over the copper coil through electromagnetic induction can pick up the power and use the power to operate without requiring a battery. And the receiving coil, when plated in silver, operates at a greater efficiency than if it isn't plated in silver, which means if inductively coupled power transfer becomes a technology that is used for motor vehicles, then it's likely to provide a new source of demand for silver. Now, the intriguing thing about this is you would never put coils underneath all your roads, but you might put it underneath busy urban roads. You might use it for buses and delivery vehicles and obviate that large battery packs or have only smaller battery packs. We don't really know whether this will ever be commercialized, and if it is, how it will happen. But it is an interesting idea. Substitution. So because silver is used in many different areas of manufacturing and medical care, substituting isn't simple, and it isn't feasible to use a single material to substitute for all the multifarious uses of silver. So substitution is probably quite difficult to do in individual cases, and certainly not feasible with a single substitute. But there is research being done in general into use of carbon nanomaterials as substitutes for many scarce metals. There's no indication that this is going to happen at any time soon for silver. So where are we? Is silver in deficit? I prepared a spreadsheet, and I made some simple assumptions. So I took the data from 2011 to 2020 that we looked at earlier in the presentation, and then I calculated supply and demand from 2021 to 2030 on the basis of these assumptions. So a supply reduction, which we have seen appears to be happening, of 3%, 3%, 3%, and then a gradual supply increase from that time forwards. This is an annual change year on year. And a consistent demand increase of 2% year on year. And if that happens, then your supply initially drops down to a low of 866 million ounces, but then starts to rebuild. And your demand continually builds at a 2% compounding rate. If you calculate the cumulative difference, then in 2028, you reach the point where you've used up all of the current silver stocks. Now, I'm not saying this is going to happen, but it's an interesting illustration of what could happen with these particular assumptions that I've used. I plotted on a graph, you can see the supply curving down. We know it's coming down here anyway. Curves down and then starts to build up. And then we have the straight line increase in demand. If this does happen, clearly there's quite a large gap here, which one presumes would be filled by price increase, which would pull more silver onto the market, either through scrap or through increased production of mines or as a byproduct. So
that's very good work, Richard. I mean, the thing is that what that's showing you is that any continuation in the trend of falling supply will result in this gap which below rising demand, which will mean that the price has to rise, basically.
Yeah.
And we're close to a crossroads.
Yes.
Where instead of there being more supply than demand, there's now going to be more demand than supply. And the other thing is that any silver supply coming on stream, the price difference between the price signal now and new supply is years, because it takes 7 years to get a new silver mine into production.
Absolutely. I mean, it could take a long time for the two to equilibrate. So my conclusions: supply and demand for silver is currently about in balance. Price of silver, as we've seen, tends to move with the price of gold, although, as Keith correctly points out, it seems to be more volatile than the price of gold. Silver has a separate set of price drivers that gold doesn't have, and silver supply is falling whilst demand is probably going to increase. And in my view, that means that the price of silver is likely to rise, but I do not have a view on how much it's likely to rise or how long it's going to take to do that.
Can I just add, Richard, that I think, good work. It's taught me a lot, thank you. But it seems to be a classic situation where a supply excess has led to fundamental underinvestment, and we're now getting to the stage where that lack of investment is causing a fall in the silver supply, which can only be rectified by a rise in the price to the point it incentivizes new mines. But during that period where prices are high, but there's no new supply coming online because it takes 7 years to get permits and start digging, then the silver price is likely to rise quite substantially. And that there could be an opportunity here. Yeah,
there could be indeed. And there are quite a large number of large silver mining companies, and there's also quite a large number of small junior silver mining companies. So there's quite a big selection of investments to choose from if you're interested in investing in these companies.
Great. And we will be covering some of them in future episodes of Share Talk. So thank you, Richard.
Pleasure.
Thank you all for listening. I hope you will press like and subscribe to the channel. And goodbye from Richard Wheater.
Goodbye. And goodbye from Keith Jordan. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.